Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing various years of the market cycle and making some comparisons in ways that we have not done so before. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That sale is going to end on Wednesday, so make sure you lock in the lower rate. Let's go ahead and jump in. Now, we've often talked about the cyclical nature of Bitcoin and how we had 2014 as a bear market year, we had 2018 as a bear market year, and of course, we also had 2022 as a bear market year. And in fact, in Q1 of 2022, when we saw Bitcoin rallying back up to the 200-day SMA, we more or less just decided, hey guys, it's probably going to get rejected, and we're likely just going to experience another bear market year, thanks to the deteriorating macro conditions. But what I wanted to do in this video is hone in a little bit here on the individual years and then averages of those years. Okay, so it is dubious, I know. You have 2014, 2018, and 2022. Year to date as a function of time throughout their entire year. What you'll notice is that they ultimately give drawdowns, but they're all very different from one another, right? Like one was down about, 2014 was down about 60% as it measured from the start of the year, but 2018 was more so down about 75% or so measured from the start of the year, whereas 2022 was somewhere in between. And it had me wondering, what if you were to take an average of 2014 and 2018? Could it have provided any insight into what would be a likely outcome for 2022? So if you come up here and we put in these average, we take an average of 2014 and 2018 and overlay it, that's what you get, this sort of the line that comes in between right here. And if we go ahead and remove 2014 and 2018 and then add on 2022, what's interesting is that 2022 sort of oscillated around what the average was from 2014 and 2018 and actually ended the year with a drawdown as a function of time measured year to date from January 1st that was basically the same as the average of 2014 and 2018. You can see that by the end of the year, if you zoom in here, 2022, the drawdown or the ROI, if you just normalize it to 1, was 0.346, whereas the average of 2014 and 2018 was 0.338. So it was essentially the same thing. Now, probably know where I'm going with this, right? What if we were to do the same thing with 2015 and 2019? Now, the reason we might want to do that is not to tell us what has to happen this year, but just to tell us what could happen this year based on the context of history. Now, we always understand, it's something I see in the comment section all the time, and we've talked about plenty of times, and it's one of the reasons why I said stat cash, right, in 2022, is Bitcoin has only ever existed during relatively loose monetary conditions. Now, there was a period a few years ago where the Fed was raising rates, but it didn't last very long. The economy was a much better off at the time. We also didn't have very high inflation. This time, the Federal Reserve is likely going to remain a bit more hawkish longer than they otherwise would have had inflation not gone up as high as it has. So we understand that these years are not going to be exactly the same, right? We understand there's a recession risk. We understand that, right? And I don't want to minimize that aspect of it. And it's why I will continue to say that having a healthy cash position is not a bad way to go, right? It's not a bad way to go, at least until the macro looks better. But it doesn't mean that all assets are doomed to just go down monotonically until that time. So one thing you should take a look at is 2015 and 2019. And the reason is because they came after the bear market years, right? The primary bear market years of 2014 and 2018, these were the years that came after it. You'll notice that both of them ended the year between 1 and 2. But what I want to do is take an average of them. What you will notice before I take an average is that both years actually saw a bit of drawdown before they saw any type of sustained rally. 2019 only saw about a 10% drawdown as measured from the yearly open, whereas 2015 had closer to a 45% drawdown or so. So clearly 2015 had a much rougher start to the year. And one of the reasons for that is in 2018, the 50% capitulation actually came in December, whereas the 2014 bear market was not actually over until January 2015. And you can see that reflected on this chart, right? Like it took an extra month in that bear market into the next calendar year, whereas in 2018, it was just done by December. But what you will notice is that they both did go slightly lower, but both of them ended the year positive, right? From as measured from the yearly open. What I want to do now is take an average of 2015 and 2019. So we're just going to take an average, and that's what you get. Now I'm going to hide 2015 and I'm going to hide 2019 and just look at the average of the 2 years that came after the primary bear market years of 2014 and 2018. I'm also going to overlay 2023, which of course just started. So far, 2023, as measured year to date, is actually performing better than the average of 2015 and 2019. What you'll notice if you take the average 2015 and 2019, the drawdown from the yearly open was about 25% at its worst if you take the average. Now, again, 2015 did see a worse drawdown, but also 2022 was actually saw a worse drawdown than 2014 measured year to date as a function of time by the end of the year. So interestingly enough, though, the average, which you'll see is the average by the end of the year was about 1.66 or so. So let's say, that let's say you had a 60% rise in the price of Bitcoin or something. If you were to go take a look at where Bitcoin opened the year, it opened the year at 16.5K. Now, a 60% rally from that level would actually put it, at around 27K or so, 26, 27K. And to me, this sort of represents one of the more optimistic scenarios, right? So like if Bitcoin is trading at that price by the end of the year, I would say things are going pretty well, right? Things are going pretty well if Bitcoin's trading at that price at the end of the year. The other thing we should consider is that there was a drawdown, right? A further drawdown, even if you take the average of both years to the tune of 25%. Now, note that the drawdown from both years that went below their yearly open occurred fairly early on. So within about the first 3 months or so. Because we know in 2019, by the time April rolled around, Bitcoin was off to the races. In 2015, Bitcoin capitulated in January. And then after capitulating, it sort of hung around the lows until the last third of the year, and then it took off, right? What you'll notice is that if we were to just say, what does a 25% drawdown represent from the yearly open? That would get Bitcoin to just above that $12,000 level. Now, the $12,000 level is an interesting level, of course. I mean, that would represent, I believe, about an 80%, something like an 80-something percent drawdown from the prior all-time high. And I'm not saying that it has to go to these prices, but it just shows you that, there is reason to be at least a little cautious as we go into 2023. History shows us, if you take a look at 2015 and 2019, history shows us that in both instances, the yearly open did not mark the low for the year, right? In both cases. So in both cases, the yearly open did not mark the low for that year. In 2019, while we went lower than where we opened the year, it did not put in a new market cycle bottom, whereas in 2015, it did. You'll note that 2019 saw its lowest price within the first month or two. And the same thing occurred in 2015 as well, right? It was within the first month or two. So the main thing I think to think about here, in addition to taking averages, is what you'll notice is that 2019 had a solid first half of the year, and the second half was pretty bad, right? It was just a slow bleed, and everyone sort of tuned out again. 2015 had a rough first half, but the second half was strong. And this sort of ties into what we were talking about yesterday when you look at monthly returns, and note that while 2018, 2014, and 2022 all had about 8 to 9 red months, 2015 and 2019 had, it was more or less a mix, right? You had 5 or 6 green months, 5 or 6 red months, something like that, both of those years. And so I would argue, hey, there's a good chance that 2023, it won't be just down like it was in 2022. I think the main thing to sort of think about as we go throughout 2023 is, and especially comparing to 2015 and 2019, I think the main risk that will exist is a recessionary risk, right? Now, we've seen Bitcoin withstand a lot over the last year. We saw the collapse of Luna and UST. We saw the collapse of the fall of Celsius, the fall of BlockFi, the fall of FTX, and now there's even other companies, right, that are coming under scrutiny even today. But we're still seeing Bitcoin hold its own, right, to some degree. I mean, now it has continued to slowly push lower, but the drawdowns have not become as intense as they were, say, a year ago, right, or 6 months ago. They've gotten a little bit more manageable as time has gone on. And so arguably the larger risk that Bitcoin faces over the next 12 months, while I do think there are some elements of, are all these other centralized platforms, are they solvent? Are they not? And if they're not, I think Bitcoin will take a hit. And that could lead to us going below the yearly open. If some of these other companies are proven to be not solvent, then you could easily see Bitcoin come back down and repeat history like we did in 2015 and 2019. And suppose that Bitcoin does get some type of a rally at some point, let's say, I don't know, Q2 or something like that. The main risk, I think, later on in the year, let's say Q3 and Q4, would be, are we going into a recession, right? Here's the thing that is worthwhile to consider, right, for 2023. Here's the thing that's worthwhile to consider. What comes after 2023? It's the halving year for Bitcoin, right? So I would like to see, inflation come back down this year. And I'd like to see the Fed continue to hike interest rates and keep them elevated to make sure that inflation comes back down, so that by the time that 2024 rolls around, we're just back in business, right? We're back in business. And let me show you what I mean. We looked at bear market years. We looked at recovery years where Bitcoin mostly goes sideways and sometimes it goes lower, right? 2015 and 2019 did push lower than their yearly opens for at least the first part of the year, and then they recovered later on. Let's take a look at halving years. 2012, 2016, and 2020. 2020. What do you notice? They're all relatively good years. Now, let's take an average. So we'll take an average of 2012, 2016, and 2020, and you get something that looks like this. Now, what I'm going to do is I'm going to hide 2012. By the way, before I hide it, note that 2020 actually gave the best returns out of all three of those, right? 2012 was second best, 2016 was worse, 2020 was the best. Bitcoin did a lot in 2020 when you actually think about where it started and its low, and then where it actually ended the year. But if we go back and hide these and just look at the average, Bitcoin went up on average about 3x in its halving years, as measured year to date from the start of the year. So let's imagine that Bitcoin has a fairly sideways year. Okay, let's imagine that, we spend some time at prices lower than where we are today. We spend some time at prices higher than we are today. But suppose we enter into 2024 at maybe a similar valuation as today, right? Which is a possibility. And, I know that might sound somewhat depressing, but it is a possibility, right? And there's two ways we could get there, right? There's one way we go up and then we come back down later on because of a recession. Or maybe we go down first because everyone's scared of a recession, and then we pop back up later on. And then when we get a recession, like we got in 2020, although it was very brief, it's just a higher low or something, right? Like there's of course various paths to get there. But wherever Bitcoin ends this year, whether it's 16K, 15, 14, 13, 12, 11, 10, or whether it's 20K, 22K, I would argue that 2024, being the halving year and likely also a period where we go back into some form of quantitative easing, is probably going to be a better year. Okay, so my general speculation is that 2023 won't be as bad as 2022, but I do think that 2024 will likely be better than 2023. I will continue to say I do think that 2023 is more or less just going to be a recovery year, right? Where it it might put in higher prices for a few months, but we're also probably going to have some bad months as well. Okay, 2015 again, 2015 and 2019 shows us that that these years after the major bear market years can be somewhat brutal, not always from a price-based capitulation point of view, but sometimes from a time-based perspective, right? Because everyone wants the price to go back up, and sometimes it just takes a while, Sometimes it just takes a year before you're really going to see things start to mature and go back up. So I will say this, right, as we really get going into 2023, I will say this. If we see some type of further drawdown within the first quarter or two, I think that might represent, you can kind of see what happened the last two times, right? That could be a great opportunity. I'm not saying that right now is not, but I'm just saying if you were to see something like that, it would somewhat rhyme with an average of the past. And also, in the same way, if we just scrape the bottom for half the year, that would be fairly normal as well. What I think is a less likely scenario is a rally out of the gate, where Bitcoin goes up 3 or 4x, right? Like, I don't think we're going to see that in 2023, mainly because of how bad the macro is. The macro in 2023, unfortunately, is worse than it was in 2019, right? 2019 wasn't nearly as bad as it is today. We didn't have high inflation back then, and we didn't have the Fed raising interest rates at a pace faster than we've ever seen before. So I don't really think that this is in the cards, but it doesn't mean that there won't be a rally at some point this year, similar to what we saw in late 2015, or similar to what we saw in 2019, maybe just a more, tempered version of it. So I think it's worthwhile to sort of look at the context of the past to say, hey, this is what has happened in the past with Bitcoin during the only thing we've known, which is loose monetary policy. And I'm not just going to be blind to the idea that we are now in a period of much tighter monetary policy. This is just what we have to work with, right? All we have to work with so far is relatively loose monetary policy and knowing how Bitcoin performed during that time. And during that time, we did see us go lower than the yearly open for a month or two at least, and in 2015 a lot longer. But by the end of the year, things were finally starting to pick back up. Okay? So I think this is, a useful chart to look at, taking the averages of them to try to figure out, again, what is a potential scenario. Again, just to remind you, this is what the average of 2015 and 2019 looks like, right? If you take the average, you sort of just get an immediate dip down within the first month or two, followed by, a slight move to the upside and then a relatively boring second half of the year. If you take an average of 2015 and 2019. So again, as we go into 2023, I think the main things to think about are knowing that next year is the halving year. We'll probably go back to QE next year. The Fed will likely cut rates next year. This year, still going to be somewhat hard, okay? Doesn't mean the price can't go up some, but you should also still be prepared for a potential downside as the context of history suggests. Thank you guys for tuning in. Make sure you subscribe if you're not subscribed. Give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. That sale is going to end on Wednesday. I'll see you guys next time. Bye.